Welcome to Smart Stock Watch. Today is January 12th, 2026, and we're diving into the latest earnings report from Sify, a leading ICT service provider in India. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Sify has just released their Q3 FY 2025-26 earnings, and there's a lot to unpack, from revenue growth to strategic investments in digital infrastructure.
Revenue and profitability overview. Let's start with the top line. Sify reported revenues of INR 11,596 million for the quarter, marking an 11% increase over the same period last year. John, what are your thoughts on this growth?
It's a solid performance, especially in a competitive market. The revenue growth is driven by increased demand for their network, data center, and digital services. However, despite the revenue increase, they reported a loss of INR 329 million, which is a concern.
Indeed, and their EBITDA also saw a significant increase of 29% year-over-year to INR 2,470 million. How does this reflect on their operational efficiency?
The EBITDA growth indicates improved operational efficiencies and cost management. Sify is investing heavily in infrastructure, which is reflected in their CAPEX of INR 3,052 million this quarter.
Strategic initiatives and investments. Sify's strategic investments are noteworthy. They sold 12.16 megawatts of additional data center capacity and increased their SD-WAN service points to 9,695. How do these initiatives position Sify for future growth?
Sify is clearly focusing on expanding its digital infrastructure to meet the growing demand for cloud and AI services. The increase in fiber nodes and SD-WAN points enhances their network capabilities, making them a more attractive partner for enterprises looking to scale their digital operations.
And with a CAPEX of INR 3,452 million, it seems they're committed to long-term growth. How does this align with their overall strategy?
Absolutely. Their investments are aligned with the rising demand for secure and high-performance digital infrastructure. This positions Sify well to capitalize on the digital transformation wave in India.
Customer engagements and market position. Let's talk about customer engagements. Sify's revenue is split across network services, data center services, and digital services. What does this diversification mean for their market position?
The diversification across these segments allows Sify to mitigate risks associated with any single line of business. Their ability to secure contracts across various sectors, including finance, insurance, and government, demonstrates their strong market position and adaptability.
They've also secured significant contracts this quarter. How does this impact their growth trajectory?
These contracts not only boost their immediate revenue, but also strengthen their long-term relationships with key industry players. It positions Sify as a trusted provider in the ICT space, which is crucial for sustained growth.
Financial health and risk management. Turning to financial health, Sify's net debt stands at INR 35,966 million with a cash balance of INR 3,627 million. How should investors view this?
While the net debt is substantial, it's important to consider the context of their investments in growth. Their equity position remains strong at INR 15,792 million, and their disciplined approach to capital allocation suggests they are managing risks effectively.
And with long-term borrowings at INR 27,891 million, what are the potential risks?
The key risk is ensuring that their investments yield the expected returns. However, their strategic focus on high-demand areas like data centers and digital services should help mitigate these risks over time.
Management commentary and future outlook. Let's discuss the management's commentary. Chairman Raju Vegesna highlighted India's growth and Sify's role in the digital ecosystem. How does this align with their future outlook?
The chairman's comments underscore Sify's strategic alignment with India's digital transformation. Their focus on AI, cloud, and digital infrastructure positions them well to lead in these high-growth areas.
And CFO MP Vijay Kumar emphasized fiscal discipline. How does this impact their strategy?
Fiscal discipline ensures that Sify can sustain its growth investments without compromising financial stability. Their focus on long-term value creation is crucial for maintaining investor confidence and achieving strategic goals.